not entertained. Alright, well, that's the title of the video. A lot of you guys missed it if you're new. Back in the day I made this. So I'm feeling in the spirit, obviously. Let's talk about the markets. Let's talk about metals and what's going on. So first let's talk about gold and silver. If you watched my last video, here it is. I can't hear it. Hold on, give me a second. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. I'm literally wearing a Centaurium helmet, if that doesn't give you a clue. But this was my last video. Do not invest anything you're not willing to lose sleep over, or, you know.
This is funny. I see people tweeting stuff like this. Why is the stock getting killed? Even Schiff, he's like, this doesn't make sense. These mining stocks are still super undervalued. And they're all like freaking out on Twitter. Yeah, but margin calls happen. Margin calls are, most people don't go all in on mining stocks, right? They still hold a lot of tech stocks and other things. And if the NASDAQ has a huge correction, what happens is it forces them to sell everything to pay for their margin calls, their negative equity in their accounts. And then they sell mining stocks as well. Not just that, now they're conditioned to think that when the market falls, mining stocks are going to fall as well, just like they did in March, which is great. It's a great buying opportunity. In my last video, I said I've already taken profits on my leveraged ETFs and my call options on these mining ETFs, even on the leveraged ETFs. I made a killing, I'm not going to lie, in the past few months.
Alright. So, in my last two videos, apparently, I was telling you guys I took profits on the leverage ETFs and some of the ETFs, some portions of the ETFs. Now, personally, this is what I do. I trade about 20% of my total capital in my account, right? That's what I'm really trading with. Now, any given position, you're not supposed to put more than 1%. Sometimes I break my own rules. For example, in March, I broke one of my own rules. I went in heavy on mining ETFs, leverage ETFs, and everything. And March was the time to buy mining stocks. It was like your one in a lifetime opportunity, and I was begging everyone, like, hey, now's the time to buy. Now go all, that's what I said I was doing. I went all in. And I leveraged up to the gills. And I also put on a bunch of call options, and I took them off about a week and a half ago, off of the mining stocks and ETFs, right? So that was an epic trade. My account grew like 20x, my entire account, and very epic. Okay, so calling this intermittent top, this swing high on the weekly. Well, this is Apple, but let's go to gold and silver. All right, here's gold. So calling this top right here was beautiful. Okay, now I called it a week early. The price was still around like 1940, 1930, and that's where the price of gold is right now. But the mining stocks started selling off, and the mining ETFs started selling off as gold was going higher and silver was going towards $30. They were signaling right then and there that this is going to be kind of like a blow off top for a swing high. Now, swing high means just a correction or a pullback within a larger time frame cycle. Okay. Now, the reason I saw this to be a good time to get out of the leverage ETFs and the leveraged mining ETFs and all that I trade, and some individuals as well. I put on a bunch of call options on some silver mining stocks that are well known but had a lot of upside. Okay, so what I'm trying to say is I took profits because I was expecting the broader market to sell off and have a huge correction like it did back in March. Okay, well, we're at the very beginning stages of that. So let's look at all right. Let's use the NASDAQ and the FANG index. Hold on. Let's use the FANG and the NASDAQ composite to try to time this and give you guys a better example of what I'm talking about. Give me a second. Okay. I just want to make sure you guys can see everything. I don't know why my other camera's not working. Of course. Anyways, these are daily charts. The FANG index on the left, NASDAQ on the right. Now, because of the virus and everything, for some odd reason, everyone's like, oh my god, these are the safe haven stocks in the equities markets because, well, everyone's going to go onto Amazon, Netflix, Facebook, Google, and all that crap. Kind of true, but that doesn't mean that their earnings in these companies are not overvalued. They are beyond overvalued. Amazon's probably the best one out of all of them that I believe, because they're building out this giant supply chain. Not that I agree with any of it, and I think it should be broken up, but probably won't be because, corruption. The FANG on the left, NASDAQ on the right, daily charts. So they already had their tops in. The prices are lower from their all-time highs ever. And they're extremely overextended to the upside. These moving averages, you need to close this gap because they're overextended. See this huge gap between the 50 and the 200-day moving average? Look at this gap. Where the blue line is. That sort of needs to close. Okay, that's simple moving averages right off the bat. Another thing is one of my indicators, TDI. It's been giving me sell signals for weeks now. Now, if we also take a look at the oscillators, super overextended. One of my bottom ones here telling me it's way overextended. MACD, RSI, they still have more to fall, but you can see it way better on the weekly. Give me a second to pull it up. See how pegged to the top here it is on the RSIs. Momentum oscillators. MACD hasn't even begun to start rolling over. All of my indicators, oscillators on the bottom here, which pretty much tracks momentum, volume, the breadth of the market, the cash flowing in, well, it's going to lose momentum. It already has. It started at least. So my theory, this is just a theory from the past, right? Now on the weekly, I also have a 9 sell signal on the FANG index. And check it out on the NASDAQ. Can it go a little bit higher maybe tomorrow? Maybe by the end of this week? Yeah, maybe. But after that, I mean, I think the move's over. Volatility is going to come back, believe me. It's been way too long, and none of this makes sense, right? 50-some million unemployed, printing, the economy, small businesses. It's a disaster. It's a disaster. None of this makes sense. Even for the tech stocks, I don't care. None of it makes sense. The only thing that makes sense is don't fight the Fed, and they are pretty much all the inflation's going into the equity markets. That's where it all is. There's that little debate between Schiff and what's his name? I've read his books. It doesn't matter. This is where the inflation is, all right? And we're gonna that inflation's gonna transfer to us who hold mining stocks and physical. Your mining stocks are gonna do way more than your physical. The physical is insurance. The mining stocks is where you get the wealth transfer. All right, I believe. So on the weekly, I've got 9 sell signals. All right, and these have called previous tops pretty well. Now I don't just look at that. I look at all of my indicators. I line them up in a row, and the more ducks I have lined up in a row, higher probability trade. So for the past few weeks, I've been just putting on more puts and puts on. I'll give you guys some freebies if you hold on. We'll talk about them as we get to those charts to possibly look at an option to short the market, right? Now, what other things am I looking at besides just these tech bubbles? I mean, this is like the .com bubble times 10, by the way, in my opinion. So in my last video, I gave you guys a perspective of what it looked like, right? So the last .com bubble, I'm zooming out right now on the NASDAQ. Here's the NASDAQ. This right here, to give you guys a visual perspective, .com bubble. Right? This is where we are right now. Pretty crazy. Who would be chasing this? Who? Maybe some 20-year-old millennials, more than likely. I don't know. The Fed juicing the market. They're all going to be bag holders. The Fed doesn't care if they're bag holders, but people who are new to trading and investing with their stimulus checks, they're going to get wrecked. Listen, a very nice steep correction is in order. That's all I have to say. All right. Now, when does this all come to an end? I'm talking about the big one where, it literally comes back to earth and back to reality. I don't know. Because I think the Fed still, the markets and the world, for some reason, is going to let them keep printing, and we might actually go even higher and parabolic. I don't know yet. We'll see. So we have to be careful. Okay, so when I say you have to be careful, now if you're holding just mining stocks, whatever happens, happens. Okay, if you see a 70% drawdown, just don't get emotional about it. But if you're leveraged, or you have a margin account, or you have options, that's when you have to be very, very careful, because you could blow yourself up. You could even end up owing money to the brokerage houses. So if you don't have like 6-7 years experience, I highly suggest you do not mess around with options, leverage ETFs, and margin accounts. And you know what's crazy? These days they give everyone, it's automatically given to you in a margin account. And in the future we're going to be reading about them in articles and books, how reckless and stupid that was to give retail investors margin accounts. And then of course they're going to blame it on capitalism. But do not mess with margin if you don't know what you're doing. Like, you seriously need, because if you don't hedge, zero hedge, right? If you don't hedge, you're gonna get wrecked. You know what just hit me? At the beginning of this video, because I'm in the spirit, right? Got my helmet on and everything. Lately I've been watching a lot of good movies, like based movies. Because obviously every movie these days is just pure, absolute garbage. Have you guys ever noticed how you watch any of these like comic book movies, these Marvel or whatever movies, like they don't stick with you? You don't remember really anything about it. That's because you're watching a cartoon. Most of it's just CGI. The entire time they're in front of a green screen. Every plot, every movie, like the plot is the same on literally every movie. And they're cookie cut for the world. There's no like, don't believe me? Alright. Well, go back and watch some based movies. Some good movies. It's like storytelling. Like back in the day, you'd have the wise man around the campfire telling all the kids and everyone and the soldiers the heroic stories of the past, right? All right, some based movies because I've been watching them. Because of that one meme on my Twitter, of Trump. Braveheart is probably the most base movie you could watch that I know of. All right, I know someone's gonna go in the comments section and give their whatever. What else? 300 based. Yeah, there's some CGI in it, but it's still good. It's based. The Patriot, based. All Mel Gibson, based. Even Apocalypto, that was pretty based too. He was a director or whatever. What else? What else? The Gladiator, pretty based. I liked it. There's a lot of movies out there. You just have to find them. There's Arn. There's, oh man, there was a 7. I'll make a list and I'll post it in the newsroom because I know of a lot of based like good movies from like the early 90s and 2000s. And by the way, the graphics, they were more realistic back then because they weren't computer. All of it wasn't computer, maybe partially, right? You guys know what I mean. Like, go watch Armageddon or Independence Day from back in the 90s. I think it looked more real than today's movies. If you guys know what I mean. Anyways. Alright, let's get back to it. Took a little break from all this. Alright, so we need at least some sort of correction or pullback, right? Maybe even a sharp one. Something like this, or something like this. Going into the election, it would make sense. Not just that. I mean, come on, look at this. This is ridiculous. This is unbelievable. This move during the greatest beginning of the greatest recession ever, and pandemic, right? Now, of course, they keep recycling. Oh, there's a vaccine, whatever. I think the fact that Putin came out with it, I give it more weight because they don't do stuff like that. When he says he has something, he probably does because he wants to make his empire look legit, and he's smart, I think. And he's also not in the predicament as the West. They have no debt, by the way. So I'm expecting at least a return back to the previous breakout. Well, I would say there's a lot of support around 8,300 on the NASDAQ here. Now, if the NASDAQ goes back to 8,300, it's going to pull the rest of the market down with it, including metals, because people are going to get margin calls. So the mining ETFs, I think, have more downside. Now, if you look at, by the way, and this is, okay, so if I wanted to manipulate the metals prices lower, which they are doing, open interest is through the roof, like 10 years worth of supply or something, and nothing's changed. And a lot of people on YouTube have been saying, "Oh, it's over." It's not over. And listen, until the printing presses can keep running, and let's say most of the people on Wall Street and the normies haven't woken up fully to what's going on, they'll probably get away with it a little bit longer. But it's becoming weaker and weaker because the actual physical spot price, the margin on it is still wide. So what you could do, right, is just go on the futures and stand for delivery, and then they have to deliver you the physical metals at a lower price than the spot price in the physical market. All right. So they dumped the price of gold prior to a market correction, and that's what I would do if I was them. You better believe this move right here. You know, there's some smart money who did it. I did it. I even went short on some of these leverage mining ETFs, and they're already up big time. So, smart money and institutional banks. But you know what? If the broader market sells off some more, there's probably more downside. So how much downside do you guys think we're going to get on gold? Well, I wouldn't try to time the bottom, but what we could do is you could dollar cost average in as the price falls. Let's go to a weekly chart. I think the weekly is a good one to look at for now, for this video. Well, the biggest support, the major support is at like 1,300. There's no way the price is going to fall back down there with global central bank printing globally, right? There's no way. And the dollar, there's no way. If you understand what's really going on, you understand that they can't stop. They have to keep printing. It's either that or the greatest 1930s Great Depression ever. So they're not going to do that. They would rather buy themselves more time, and it's the easier route to just print. Also, while the dollar still has value, just keep doing it, because you're still sucking assets from the world and resources, and you could do an infrastructure bill. You could buy votes. You could do all kinds of crazy stuff and still use the dollar's strength while it still has it in print to, I mean, I don't blame Trump for what he's doing. It's the only thing he can do. It's the only thing he should be doing while he could still do it. And then once the dollar's has lost enough value, then you do the reset, right? The global reset, monetary reset. All right. Anyways, the next major support is around 1560. Do I think the price is going to fall all the way back down there? No. But 1750, I think, is possible for this correction in gold. I think around 1750, maybe a little bit lower, maybe a little bit higher. I think that would be a perfect correction. There's a ton of support, a ton of buyers in that area, and I think by the time the price does fall down here, hopefully it'll happen within the next 3 weeks. It'll be quick, sharp. A lot of buyers are going to step in. And they're probably going to step in as soon as the Fed comes out with more stimulus and QE, because the broader market's going to be correcting and they can't let too much of the air come out of the bubble because then they can't reinflate it, if that makes sense. So that's what I'm looking at. So, you know, what I will be doing, which I could be completely wrong, not financial advice, consult your licensed financial advisor before doing anything. I'm just gonna start scaling in and adding and accumulating back those mining stocks and ETFs I took profits on. I will also make probably a killing on my shorts, and I'll have even more capital to deploy and accumulate. If it falls a little bit lower, so be it. I'll keep buying all the way down to like 1,500 if I have to. I don't think it's going to fall that low. I think it'll be a sharp decline, and it'll reverse very quickly as the Fed comes out with QE. By then, also, what will happen is the election will probably be over. It'll probably be Orange Man for the win, and then the market will get juiced again by the stimulus and his victory, and then we're going to go for that crazy blow off top. Infrastructure spending and a huge party binge for the next few years. And hopefully within those next few years, he could bring back manufacturing to the U.S. And then after that, we get the really big one. In the meantime, I think gold in the next couple of years could, by the end of 2021, I think it could easily get to 2,700, if not 3,000. So that's what we're looking at. By then, these mining stocks will be all 10x. If they have proven reserves in the ground, just off of speculation, they're probably going to go up by a lot. So, but if you get the good ones with solid balance sheet, solid reserves, solid cash, capex, opex, team, right? The CEO with track record, and then they're getting backed by certain people within the space and getting financing. I mean, not just that, the balance sheets of these mining companies are being repaired. I can't say they're fully repaired. It depends which mine and whatnot, but the balance sheets were destroyed in the past 7-8 years. Now they're already just fully getting repaired. So going forward from now on, these mining companies are going to have the best earnings and revenue, probably like some of the best in the entire equities market. So that can't be ignored as well. Even though MSM will probably ignore it until it's too late. But, you know, when they start reporting on all of this, then you know we're starting to get near the top. So, so for you people out there, you plebs, who haven't taken part in this wealth transfer that's been going on for like the last year, I would say, you're going to get that one more buying opportunity. Now, these mining ETFs and mining stocks are probably going to get hit pretty hard this time. Another 30%, 40% drop from their all-time highs. And that'll be your last probably big buying opportunity before another huge leg up. By the way, we haven't seen anything yet. I know. Now, for the people who've been buying, who've been getting in and who've joined the private group like 2 years ago, yeah, we've seen a huge wealth transfer. Some of us are getting rich, I'm not going to lie. But the music started playing. These are just the cover bands who have been playing, okay? The cover bands for the main event. The main event hasn't started. We just started playing some music and, you know, pre-gamed. All right. What else do we have? Here's the VIX. Well, VIXy, but it's the same. Let's look at the VIX. Well, on the weekly, the VIX is on a 6 count to the downside, so 7, 8, 9, maybe 3 more weeks of downside on the VIX on the weekly, but I think this is stretching it. On the daily, we had a buy signal 2 days ago. Sometimes it's a little, there's a little bit of a delay. Not really. This candle traded above it, so it did good. They're trying to cap the VIX. Listen. I don't know what's going to happen in the world. The news follows the price. The price does not follow the news. Because the price ignores bad news when you're in a bull market or whatever, and the price ignores good news when you're in a bear market. But whenever something happens with the price, whatever seems to be happening that week or day is what will be the excuse for what's happening. That's why news, you can't trade or invest off of news, really. The price predicts the news, if that makes sense. I know it sounds crazy, but for you guys who've been trading forever, you understand. Volatility is going to pick up. For you plebs, so you guys could afford to get in the private group, volatility might be a trade. The Russell, I think the Russell's not going to sell off as bad as the rest. There's definitely support around 1400. Right now it's around 1583. We'll see. This is a weekly chart, by the way. My blue line's probably going to hold up the Russell. Although, I mean, we'll see. But 14 is next support for that. IWM, inverse ETF. Euro. So, there's a lot of Europeans in the private group. Listen, the dollar, I think, is strengthening again for the intermediate to short term, next few weeks, maybe a month, something like that. So it's strengthening against the euro, while gold's falling against the dollar. So metals are going to fall short term, next few weeks or a month or something like that, against the euro. Because the dollar strengthening against it. Or wait, no, this is the euro versus the dollar. Huh. Oh, okay. So this chart is the euro versus the dollar. It's not the dollar versus euro. I had that wrong. So the euro's been strong against the dollar. Stronger. So metals haven't been rallying as hard in the euro versus the dollar. But the dollar is about to strengthen. So let me show you what I mean. I can't do charts for every individual country. Whatever you make your money in, that's what you have to price metals in. But at the end of the day, the dollar is the most important one because it's the world reserve. So the more value the dollar loses against gold and silver, the more it could rally in foreign currencies, to be honest. Also, real quick, Apple. Man, I shorted Apple like right around here. I got wrecked on that put position. Sometimes if you're too early, you might be right, but if you're too early, you're wrong, especially if you use options. I was too early and I lost pretty much the entire position. And watch the correction come now. Well, whatever. They're going to do a stock split, so I'll be able to afford I could still afford it. But I could afford more put options and maybe I can make my money back. Because I do expect a correction in Apple soon. Apple is worth more than like the entire Russell 2000. It's almost a $2 trillion company. Are they really selling that many phones and laptops and pads? No. It's just where all the inflation's going for now. And I want to take some of that for myself. I have a sell signal on the 4-hourly. Let's take a look at the daily. Also, if Apple or Amazon fall, they take the entire market with it because of Dalio's index funding. Way to go. Way to centralize the markets. There's no free markets anymore. It's all just ran by algos and you know, I get it. Everyone's like, oh, they'll just manipulate the markets up forever. They can't. Because in the end, there is no market. It's just, it doesn't work. None of it makes sense. And not just that, the smart money, they've known all of this entire time, and what they do is they do take profits, and then they'll let the market correct, and then they'll buy back in and run it back up. So it's kind of like Tether and Bitcoin for you crypto people. Yeah, I'm looking at a retracement to the 61.8 fib at around 364. It's gonna be, the price will be different after the reverse split. Tesla announced reverse split, so all the Moon Boys and Robin Hooders are like, oh, this means the price is gonna go up. I'm gonna get more shares. This is how how stupid these kids are. I'm not gonna feel bad. They're gonna be, a lot of them are gonna probably put themselves out of their misery. Like I mean, if they don't go out and do their research and educate themselves, then you get what you know. I went through the ringers. I mean, I put in my dues. I learned the hard way. I have done every dumb thing out there. Okay, but you know, if you don't know what something is, you just go investopedia.com, just type it in, and it'll tell you what it is. I guarantee you they're so dumb because of public education, they can't even read and understand something. A lot of people are so dumb, they can't get past the first 15 minutes on my videos because their attention spans are gone. This is why I have no hope for humanity, and just, you know, we're gonna do us, and we'll build our bunkers like the elites, because we're probably gonna be the future elites. I'm not gonna lie. All right, so yeah, where is my markets chart? I'm trying to find it. All right, let's take a look at the dollar, then we'll look at bonds real quick. Then we'll look at the news briefly. Wow, I'm at 40 minutes already. So, what did I tell you guys in my last two videos? I'm like, they're gonna step in. They have to. Because if they let the DXY fall any further, I mean, then the toolbox of the Fed has no more ammunition, basically. Then, I mean, they could still do it, but they don't want it to fall so rapidly. They want it to be a controlled descent. They want a weaker dollar, but they want it to be, you know, like a controlled descent, like verse time. So, like I said, if I was them, I would let the market correct. So what? So what if it corrects 20%? I'm looking at a 20% correction in the entire market, broader market, as a whole. All right, 20%, 15. It's not the end of the world. I mean, everything is beyond overvalued. It's not going to make any difference on Main Street, by the way. So, you know, a nice 15-20% correction in the equities markets. Well, the dollar will get bid up as a knee-jerk safe haven reaction, and then probably break back down as they come out with stimulus. And then they might trade sideways and then fall in 2021. Probably around I mean, we'll see when we get there, but there will be support around the 84 handle. Okay. Also, the dollar sort of, I mean, a weaker dollar will help with the trade imbalances, the trade deficit for the U.S., and that's what needs to be done as pretty much a survival thing for the U.S. Also, I mean, if that's what Orange Man will do. I mean, if he loses, then I don't know what's gonna happen, guys. I don't know. Like, I'm talking, metals shouldn't be your only investment. Prepare for like the worst thing possible to happen, because I feel like they will literally run the country into the ground and part it out to China, however he says it. So that's what they'll do. They'll literally just sell it. I mean, these people don't care. They haven't. I'm telling you. All right. All right. Let's look at bonds. By the way, like, I don't want to be some like doomsday or anything. Things could. I know things look bad. You just don't be in despair. There's no point. We don't live forever, anyways. So, you know, after Rome fell, it wasn't like the end for everyone, only the weak. And then what happened afterwards? Well, you had a bunch of barons and you had the plebs, but you know, back then the serfs paid less in taxes than we do today, so it's not going to be that bad. Like, you just have more freedom, and you know, everything becomes more localized. And it's a reset. That's all it is, and things will get. I'm not saying things are going to be easy. You're going to have to work hard, but we'll see. We'll be great. I mean, for the private group, we're going to be hopefully, you know. Anyways, let's look at bonds, the daily. Gold is orange. The green is S&P 500, and the blue is 10-year yield. So, looks like we had a bottom here at 0.5 on the 10-year yield, which is nominally negative. And as it spiked here, by the way, the last time it spiked, the repo situation happened. Or no, that's June of 20. This was the last spike. Let me, it's hard to, give me a second. Back here we had the, no, that's March 20th. Let me take it off the daily. Let's go to a weekly. My arrows make more sense as well. 2019. When did it spike? Or did it spike in 2018? I guess here it spiked, and then in 2019 we had all the repo stuff. But now looks like the 10-year yield has bottomed. Now, I lost it. Why did TradingView delete everything? I don't know. Maybe it's on another chart. Anyways, if the 10-year yield gets, I would say, above 1.5, that'll just blow up the entire equity markets. And then everything blows up. Like, there's nowhere to hide except metals. And that's when the entire thing just falls apart, the house of cards. They're probably going to cap yields. See, I already made a chart of this. I just don't have it right now. at 0.90 or 0.1, somewhere around here. Anywhere around here. Probably 0.1, but I wouldn't push it if I was them. I say 0.990 is the highest I'll let it get. So they'll cap yields. But, you know, it could run a little bit more. I mean, we're only at 0.67 on the 10-year. And if it runs to 0.90, that entire time, you're going to see gold drop. And if gold, let's say, drops down to this support line right back down here, that would take us exactly to around 1750 for gold. Also, when yields spike like this, we get a correction in the S&P 500 like the equities markets, right? Like it did right here. So S&P could drop and it could pretty much drop to about 3,000 while yields rise, and then they'll cap it, do more stimulus, yields fall back down, market rallies back up, gold also rallies back up with the market. At some point when inflation's so high, the market could fall and metals will just keep rallying despite. We're not there yet at all. And when we are there, at that juncture, which I don't know when, could be a year away, could be 3. That's when the end of the final phase of the wealth transfer is happening. By the way, as our accounts grow and we become wealthier for the private group, you want to deleverage because it could get volatile. So, but for now, we're still in the beginning phases of this bull market that could last 10 years or who knows. I don't think it'll last that long. I think it'll be fairly quickly, probably 3, 5, at the most 7. But Rickards, Jim Rickard, who was debating Schiff. Now it hits me, right? Isn't that weird? Anyways, they're talking about like 18,000 gold. If it goes that high, which I don't know, because I think it's all going to be determined by when the world leaders get together and then they repeg fiat currencies to metals, and they're going to do that because central banks have been buying them since like 2008, metals or gold at least. And but if it gets that high, I mean 500x on some of these mining stocks, like 1,000x or something insane. So that's what I'm looking forward to. For now, you guys are lucky that I'm really happy that metals are pulling back, because this also, what it does is it creates a good and awesome base for metals to go even higher. So for gold here, revisiting this area will give you major support. And what it does is it turns into a giant spring or ramp or trampoline that'll just shoot it to the moon. Okay? So I'm glad we're getting a correction now. And also this gives us one more big opportunity to accumulate. Of course, it's not as good as March's lows. Like, these stocks aren't going to go back to the lows of March. That was the big one. That was the one that... But this one is your second big one before the train leaves without you, pretty much. That's what I'm thinking. All right, guys. Real quick, let's brush over. Also, I want to talk about, look, palladium, long-term looks good. Uranium as well. I have stocks. Here are some energy sector stocks. I've been long. Finally, my call options are green. They're starting to be very profitable. Hopefully, when the equities market's correct, these won't fall as hard. And then towards the end of fourth quarter, which that's when they expire, they'll be very profitable. I want to show you oil and gold. We'll talk about this again in a future video. Well, I can't find it right now. Or maybe, oh, here it is. So the purple line is oil. Candlesticks is gold. In the end, I do think oil within the next, like, this is a big call. I'm putting my neck out. I think within the next 6 months, like midwinter, towards the end of winter, spring, I think we'll see oil at $80 again. If we see oil at 80, I think we could see gold at like 2,700, somewhere around there. All right. By like, next spring. Now, by the end of this year, I do still think gold's going to make a new high by the end of the year. By the end of December, I think gold could easily be at like 23, 24, something like that, 100. All right. I just think right now for the next few weeks, we're going to see a nice sharp correction. And then it'll give you like maybe a couple week, maybe 1 week or 2 weeks of a buying opportunity to accumulate these mining stocks at like a 30-40% discount, like one more time. And then after that, train's leaving. So I put out in the alerts room for all the members, hey, send me all the stocks you think are going to go up the most, like 100x or something. And then I'm going to go look over them, the ones I've missed because I'm just one person. Yes, I've been looking at mining stocks for like, I don't even know, like 10 years or something. But there's always new ones that come online that I miss. So I'm going to look through all of them. And we're going to try to benefit as much as humanly possible. I'm pretty sure nobody else in the gold bug community or any of these other people have caught the stocks we have so far and caught these massive gains. Like nobody. I really don't think so. Like not even close. None of them are calling these swings like I am. None of them called it to the day in March to buy that low. None of them called last week to take profits. Now they're calling for it, but not last week. That was the time to do it. Because these ETFs were starting to fall before then. Even people in the private group don't like listen to me. I could tell they're like FOMO buying when I'm putting out in alerts like, hey, I'm deleveraging, I'm getting out, I'm taking profits. Human emotion is very hard to override, apparently. Anyways, these are the mining ETFs. I'm confident they're going to revisit their 200-week moving averages, which will give you a huge buying opportunity. It could be very similar to March. What happened in March when these mining ETFs and mining stocks fell like 70% or some crazy amount, and it gave you that one in a lifetime buying opportunity. I don't think it'll be that great, but I think we're going to see something like that. All right. I feel like we've already seen a decent drop in all these mining stocks and ETFs. I think they're halfway there, maybe a little less. So this is it. Don't waste it. Let's go over to the news real quick. All right, let's end this before I go over an hour. China is gonna they're de-dollarizing. The reason they've been using dollars so much and buying treasuries is because they needed it to buy oil. But I think it's of the past. But they're in bigger trouble than the US, believe it or not. I think in the end it's going to be who comes out. Well, if the US could survive from its inner turmoil, its inner battles, right? Because of certain groups and people who are trying to sell the US out to China. So let's say the good guys win in the US. Then there's a higher probability that we get for the rest, let's say a few more decades or something like that. I don't think neither is going to come out on top. Both empires are going to be weak for a very long time after this, or break up or something. But you do not want the US to fail and China to come out of this global reset on top. Even the elites who think like they're on the right side of history, they're not. Even they are going to find out that these people are not beholden to anyone except themselves. So, I mean, they're in big trouble. It's going to be wild. What else? Real estate is collapsing in all major cities in the U.S., which in the long run, this is good because it'll help people become more family oriented and community oriented. Although it's not good for the people who are already out in the suburbs and living outside because they're seeing a huge influx. And this is why we haven't seen the housing market fall like in 2008. Although commercial real estate is like in serious trouble, which is larger capital wise than homes for people to live in. And by the way, everything because of the civil unrest, which is manufactured and being allowed, these cities aren't going to recover for a very long time, decades. The damage that's being done now, it's not going to, people aren't going to go back for a very, very long time, I believe. And I don't think it's over yet, not until the election's over. By the way, I'm super bullish on copper, all commodities. We're going to go into a super bull cycle in commodities. What else? Yeah, the S&P is trying to make a new all-time high, and it will if it hasn't already, or it did close an all-time high. I was looking at the S&P and didn't notice that. It's because I was zoomed in. Let's take a look real quick and then call it a day. Not quite. Very, very close. Okay, so maybe it'll shoot up the rest of this week tomorrow. And then it'll, this correction has to come. Alright guys, smash some likes, leave anything in the comment section, share my videos, the only way my channel grows, and I'll continue to do this. Until next time.